Hey legends and legendettes, I'm just going to do a quick fire market update. So looking at the Bitcoin chart, we've pretty much been in a downtrend in terms of the 4-hour time frame. It has been brutal in some sense. Many people have got licked, and now in this particular local range, it's been pretty much sideways. And if you notice here, this is a 50-minute range, and drawing the fixed range from here to this point, kind of upper end of this high volume area is around 27.6k. And the bottom end of this high volume area is around 27.2k. So this region here is a high volume area where most of the transactions are happening. And of course, you want to really stick to the extremes of the range, and it's okay not to trade this. It's very easy to be overconfident and have really good short positions during this whole part here. But then very often people give away the gains because they get chopped up in this choppy price action. So the skill comes from making the gains in short positions here, but then at the same time, being able to preserve the capital, being very selective of your trades. And so in this particular range, it would have been okay, for example, to just, if you'd gone above here, if a slight false break of this recent high, then we went back into the range, and you could have entered a short position. I personally didn't take it because I want a bit more confirmation, and also this is a 15-minute level as well. So that's something to consider. Then of course we have this false break from the downside because we push back down here. And I was saying as well in the Discord chat how this low I didn't particularly like. I wanted at least one more liquidity grab, and we eventually got that, okay? I am in a long position, but my stop loss is quite wide. Of course, it could definitely go to the downside, right? Because if you look at the long to short ratio as well, we were actually 0.66, and so that's quite a lot of retail that are net long. But fortunately, in the smaller time frames, it has come down a bit, and open interest has come down. So this indicates to me in the smaller time frames, you could get a pop up, maybe to potentially 28.2, 28.5, potentially where the stops are. Then we'll see if we run back down to 26.5 to 25k. It is pretty much a level by level game, but it's nice to see how the open interest has come down. So it suggests that, okay, some longs have been giving up and not being stubborn anymore. But the question now is, does open interest start to increase again? And eventually, do we get another dump down to new lows? But yeah, in terms of top traders are around 0.53 net long. Nothing crazy. But retail are significantly more long. That's quite substantial, actually. But again, it's a level-to-level game. A lot can change in the smaller time frames. But yeah, going back to the Bitcoin chart, there's really only a couple of scenarios here. As you can imagine, a lot of people would have stops around this region here. So around this 28.2k region, 29.2. I think at the most, maybe we get some kind of move to recover some of these imbalances. If we get above 29.2, 29.3, that is a major sign of strength. Something else to also consider is the weekly VWAP. So that is the volume weighted average price, and we are still below that, and regaining it would be a major sign of strength. And this blue one is the session VWAP. So in other words, the volume for like the average session really for each individual day. And we're still below both, but regaining these two would be a major sign of strength. I was saying in the Discord chat, we eventually got that liquidity grab of this, and then we pop back up like that. Potential scenario could be, we could get a run-up potentially to maybe anything between 28.5 to 29.2 as a potential scenario. And something else I also said in the Discord group as well is this bat harmonic. And obviously, bat harmonic is just another confluence. You could argue it's slightly been invalidated because, of course, we've had a wick below this D, but this is a valid harmonic, and this is actually one of the strongest harmonics, a bat harmonic. And so a target for the harmonic would be roughly be at least 28.6, 28.5 at least. In theoretically, you could go as high as C as well, but that, again, might change structure. But potentially, we might get a snapback up to 29.2, potentially. And looking at certain other things as well. So looking at the NBX algo indicator, it's actually one of my favorite indicators, and there's a referral link in the description if you're interested. Join a massive community of amazing people, and just you get access to the indicators, and of course there's weekly Discord calls, which I do as well. Particularly in this, we've got some bullish divergence here as well, the 4-hour building up, which is quite nice. Of course, this isn't the best kind of support in the world, but this is something that's noted, okay? So a potential scenario 1 could be we get a snap up to potentially 28.6, potentially the targets of the harmonic, maybe as high as 29.2. The ultimate objective is potentially to get rid of these keen shorts who are just piling in, potentially if we could get to those price points. Then we might get a snapback below to this 26.5 level. You have to also be very careful as well, because as you can appreciate, this move down here like this has very much taken all the stops from last week, because we've now gone to the past week's low, but some of the stops have also been taken out from 2 weeks prior price action. But you have to also bear in mind that this 29th of March low was around 26.45, okay? And so you have to appreciate that if we break down, there will be naturally be a lot of stops here as well. So potential scenario could be pushed back down here. Then we might go back into the range, and then we might have a run up to maybe 29.2. That's the situation. And then to 25k region. The thing is that a lot of people are calling for the same numbers, like 25. And it doesn't mean it's not going to happen, but the exact route can be hard to predict. But something to also consider is that beyond this actual low here, there's actually very little support. We have so many imbalances here, and there's very little structure here. And the next situation, of course, we could just eventually just consolidate and eventually get a snap back down. The next potential situation is that we just kind of nuke completely and just get all the way back down to 25k, because again, there's very little support here. So of course we have this high volume area here, so this prior range which we're back in, and of course we initially had a tap of this point of control, we had a rejection, we went back up again, but now we're well below this value area low of this high volume area in the prior range, so around 27.5. And the question is, do we break this low? And then if we do break this low here, then the next range to really look at is this one here. And this was a range we were really stuck in for a really, really long time. And this was before the bank FUD here. Kind of the upper end of this high volume area is around 24.5k, and the lower end is 22.1k. So the thing is that if we do get a breakdown below 26.5, which is a potential scenario, then you might get a move down to 24.5. And again, breakdown below 24.5 is initial kind of really bearish sign, and it's very likely we're going to go down to 22k. That's a potential scenario as well. It's very much a case of level by level, and these are two separate ranges. This is the first range, and this is the next range. So looking at certain other things, for example, this green EMA is the 55 EMA, and this blue one is the 21 EMA, and the pink one is the 200. So currently, the actual 21 EMA is actually below both 55 EMAs and the 200 EMA. So in some ways, that is bearish. But then again, you have to appreciate that EMAs can be lagging. Perhaps this movement down has already been factored into the crossover. So perhaps we might get some kind of snapback up to potentially this 55 EMA, which is around 28.2k. It's obvious, I think, to be very careful of shorting down this region, and especially when you're in a particular range like this. If you are interested in shorting, it's better to actually have a snapback up and then short, rather than try to short in a no man's land region. So looking in terms of EMAs for the daily chart, we are kind of finding support around the 55 EMA, around 27.1. And of course we have the 200 EMA around 24, that's a bit far away. So the question is, do we get some kind of bounce back up to maybe the 21 EMA around 28.4? So there's a bit of confluence for a bit of a bounce, maybe between 28.4 28.6, but naturally the long short ratio doesn't look the best in the world. But perhaps in the lower time frames, as mentioned before, if we do get some kind of decrease in open interest and a minor pullback in the long short ratio, then we might get a snapback up. Looking at the 5-day Gaussian channel, which I've been speaking about in many occasions, very often statistically in Bitcoin history, what happens initially is that you have an initial move into the Gaussian channel like this, you have a rejection, and you go back to the lower band, so in this case it's around 19.6, then you have a pushback up. And once you break out of the 5-day Gaussian channel, okay, in this situation here, you get a back test of it, and it was around 26.5. Then statistically in Bitcoin history, what happens once you have that back test of the top band, you on average have a 30 to 40% run up. Of course, that's an average. But so far, we have actually only had roughly a 20% run up. So the question is, maybe we do get some kind of pullback eventually, potentially the top band of the Gaussian channel, around 25.2 maybe. And maybe later on in the summer, we might get a move up to 32, 31k, potentially, or 34k. We never know, right? But again, it's a level to level really, and not really getting too ahead of yourself. We've had 100% run up in Bitcoin, I believe. So looking at this huge Bitcoin run up, we've had like a huge run up, like 100%. And now all of a sudden we've had like a 10, 20% pullback, and people are getting so bearish. Okay, so perhaps the correction on this is long overdue, but we were really getting away from these EMAs, and it's just a healthy pullback in some sense. Breaking to 25k could be a potential bearish situation in some sense, but it could be a deviation play as well. Because if you imagine this channel here, we have this potentially this high around August 2022 here, and of course we had a high here. But if you imagine this as being one separate channel, you could argue that if you get a move below 25, you're going pretty much back into this range. And if you imagine one particular channel here, And below, above it, this could be another separate channel between 25.2 to 32k, and we could be in a long-winded range like this as well. Looking at certain key things as well, of course we have a rough trend line as well going around like this. So potential region of a bounce is going back down, but again that would be quite perfect, right? A lot of people will be looking at that as well. In terms of key fibs to really consider as well, so from the bottom lows around 15.5 to the top, we have actually got to the 236, around 27.3, and it seems like we're kind of having some kind of reaction here. And drawing a fib from here to the top here, we're also between the 236 and the 382. So there's a bit of confluence around these levels. Not surprised we've had some kind of reaction there. And then zooming in a bit on the lower time frames, drawing a fib from the lows here to the top here, we're actually at the 786 and the 886, so we're just dancing between 27.4 and 27k. So there's a lot of confluence around these regions, and it won't be surprising if we do get some kind of a mini bounce, at least potential grabbing these stops, and then we'll decide if we go lower down. Another thing I also spoke about last week is this bearish harmonic. This is a shark harmonic, and of course D is printing roughly here at 31k, and of course D could still go to 32k, and then we could push back down and break down to here. But this is a bearish harmonic, and it's nice to see it is playing out. And this is looking at SPX, S&P 500 index, and I was speaking about how we're having this somewhat of a symmetrical triangle between this line here and this line here. And we've had 2 touch points here, roughly 3 touch points here, but it seems like we're compressing and compressing and compressing. And of course, I have this high volume area here as well. So this is the upper end of it's around 4.1k, the lower end is around 3.8k. Of course, if we break below 3,850, which is a key level, I think Bitcoin probably does go below 25k and much lower, potentially 20k as well. But it does seem like we're kind of compressing. Question now is this some kind of local resistance, or do we get a move like this and dance like this and eventually push back up like this and take this key weekly level, or does it go back below, have some kind of a liquidity grab around here, and then go back above and then retest and then go up to this weekly level? That's something I'm considering. And of course, the last situation, of course, could be just a breakdown here, which is a bit far away, but I'm not ruling it out. Of course, 4.3k is a key resistance and a weekly level, and if we get a good strong hold above that, then actually you go back up into this range. But this is a while away. It's important not to get ahead of yourself as well. Looking at the Dixie, and of course we've been in this long channel surrounding many decades, and it seems like we're at this local support, in particular this region here. It seems like some kind of liquidity grab, false break of this low here, and we went back above and into this kind of macro channel. And so I do think Dixie does get another push back up personally. And the question is, does Dixie kind of just dance around here, around the support, before eventually pushing back up? Perhaps when we do push back up, that will perhaps correlate in the larger time frames with the breakdown for risk on assets like Bitcoin. We have, of course, have this key weekly level around 104, which is a potential bounce region too. And if I draw Fibonacci as well, from this peak to this low here, certain key fibs to really be careful of is, yeah, of course, between 103 to 104, it is a 618 and 66 Fibonacci. So that is something I'm looking at. Of course, the next key level is 108. Question now is, do we hold the support level here from like a macro channel point of view? And then the next target would potentially be if we get a bounce around the 618, maybe to 104. It's quite difficult to imagine the Dixie just breaking down all the way down to this level. I would expect some kind of a bounce, and then we'll see what happens. Especially how that relates on to other risk on assets. Looking at the total crypto market cap, I spoke about this last time as well. We had this really bearish shark harmonic as well, and it's actually played out. I actually explained last time I don't expect the total crypto market cap to really go above 1.27 or 1.28 trillion in the first attempt, and it seems like this shark harmonic is playing out. Of course, the 1.27 trillion is also a key Fibonacci resistance. So I'm drawing a Fibonacci from the local high to all from the local low here, there's the 236 is lying around this region. And of course, the major sign of strength is reclaiming the 236, but so far we have rejected above this. And it seems that we've gone now below the peak of August 2022. So naturally, I was saying last week as well, if you're heavy in spot, it's very important to just trim some of your position off, because it always gives you the power to be able to buy back much lower. So looking at the Bitcoin dominance chart, it does seem that we have somewhat of a false break, and we've pretty much been in this mini range for a long, long time, under 50%. And so initially, if you notice, we had this peak around here and this peak around here. We just grabbed the liquidity pretty much like going above here. Bitcoin dominance, and now we've gone back into the range. Question now is, do we consolidate here and eventually rip back up or go to this midpoint of the range? I do expect a move to 52% eventually. It's been much anticipated as well, and the question is, when does it happen? And if I draw Fibonacci as well from this recent peak of 2021, pretty much been below 50% for a really, really long time. Question is, when do we break out? And then it's nice to see that in some sense we have reclaimed the 236%, and it seems like we potentially could be consolidating around this before leg up to the 52%. Looking at the Ether Bitcoin dominance, it has been rising specifically the last 2 weeks, and we had this recent run up here, and slowly it has been bleeding as well now, and just a retracement specifically in the 4-hour time frame. But that's why I was saying 2 weeks ago you might have considered trading Ethereum when it's around 1.5k, because naturally money flows from Bitcoin to the top alts like Ethereum, and then slowly to the low altcoins. We are actually now below this key $2,000 level, and of course there was a harmonic as well that I pointed out last time as well. This key harmonic, it was quite bearish, and among all of them I didn't like this one as well, but we did have a breakdown below this weekly level, and so you could have actually had a short position there. It was kind of justified because you've got a bit of confluences. We had this key weekly level around $2,000, and we've broken back into the range. So it's kind of like 3 steps forward, 2 steps backwards. And you could, of course, taken your first take profit. This is definitely acceptable first take profit, around 1,800. Question now is, do we get all the way to this next weekly level? And of course, all the other things like SPX and Bitcoin do dictate that price action as well. Something else I've spoken about as well is that for ETH to really go to 2.4k, that would roughly correspond to a Bitcoin price of 34k. For ETH to go to 3.5k, which is a long, long stretch away, that would roughly correlate to a Bitcoin price of around 42k. Question is, we might not get that in this first attempt. Perhaps we might get it after, maybe in June. Of course, there's that expression, sell a man, go away. The thing is that, like, off the past iterations of around 13, some of them were, around 6, I believe, were heavy selling. But the problem is, it was hard to know exactly when the heavy selling happened, because sometimes the month of actually May would be good in some of the out of the 13 iterations, but then the selling might have happened towards the end of May, and so you cannot really bank on that saying. But that is generally a mantra in the wider market: sell in May and go away. The general rationale is that people go on holiday, just take the cash out, and just kind of go on holiday and then come back again to the markets again, maybe later on in the autumn or something. Hey guys, thanks for watching. Do check out my YouTube channel. This is where I post my videos and just my passion for crypto and really tips and tricks to really improve your trading career.